Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will generate and print a transaction report within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Dashboard. We will be continuing with the Get Great Guitars problem. If you've been working along with us, that's great. If not, we will be generating a transaction list by date. It's going to be a very useful report, the transaction list by date. The transaction list by date is a less common report than we would see from, say, the financial statements, a balance sheet, an income statement, or a profit and loss. But it's a great report to really see the detail of a particular time period, to see if we have everything in there. And it's also great for grading to see if we are going along, if we're all on the same page in terms of what has been input, if we're going on the same information to input. So in order to get there, we're going to go to the reports. So we'll go to the reports tab on the left-hand side, and we will just type in the report. So we're going to be here to go to report, and we could scroll down and find it, but we're going to put the type in there, transaction list by date. So we want to get this by date, and we're going to select the transaction list by date. So here will be the report. We're going to change the dates as normal. And the first dates we're going to put in here are 12/31/20 to 12/31/20. So we're just going to put that one day. This is when most of the transactions that we have been inputting into our problem have been input. By limiting the dates as of this, then we can really narrow down to see if we have a date problem. A common problem to be is a date problem. So we want to see if everything is here in this particular day. We're going to run the report. And here is our information. So note what we have here is all this information as of 12/31, the end of the time period. We can see the transaction date. We can see the transaction type. And you might be saying, if you've been following along with this problem, like, we haven't done a lot of these types. We haven't entered an invoice. We haven't had a bill. We haven't had an official deposit type form. Where are these coming from? And these we'll see later, and we'll see that these are the driving forms that QuickBooks uses. So when we put in the opening balances, as in here, then QuickBooks used, in this case, an invoice for that opening balance transaction. As we work through this information, we'll see which transactions will be linked to which forms will be generated when QuickBooks has a certain transaction. Typically, we'll be using those forms to generate the transaction. But also, like here, there could be times when we enter data and QuickBooks assigns a form, the typical form used in order to create a typical transaction. So we have the number, the posting, the name, the memo, and the description. The account, this is going to be there's two accounts that are going to be affected here. And then the split, and that'll be another account, inventory asset in this case, and then the amount. So it's good here to just go through this and see if all the transactions that we have here line up to what we think we should have. Now, if anything is not on this transaction list and we think that it should, if we're working through this problem, we print this out and we don't have the same transaction list, then a good thing to do is to change these dates possibly a whole year back maybe. Just put this 2019 and then change the later date to 2021. And see if there's any of these dates that are different. Go through here and say, since this is the first month of operation, we shouldn't have any other dates here. So if I was to change this, let's actually do that. We will change this to 2019 and then change the end date to the 21st. And then I'm going to run this report again. We'll run it again, make sure to run it. And then when we scroll down here, if we see any dates that will be outside of these dates, that will be a common error, and we can then catch that and pick up any dates and then fix those. We could fix those within QuickBooks by just double-clicking on this or clicking one time on it, and that will take us to the particular form that we have. So in this case, we had an inventory starting date, and we could try to change the initial balance if we wanted to here. Inventory might be a little bit more difficult to change the balance, but here are all the inventory items we have. And then we have this invoice down here. We can do the same thing if we needed to change the date here. We can go to the invoice and click on that. drill down on that information, and here it is here. Again, you might be saying, hey, I didn't enter an invoice, because we haven't entered any invoices so far, but when we set up the customers, the system of QuickBooks then set up an invoice, that being the typical form used to set up the customer. So when we put those beginning balances in for Anderson Guitars, Anderson Guitars, that's when this was set up. So I'm going to close this back out with this X here. Go back to the report. Same with the bills down here. If we wanted to change anything on the bill, we can drill down on the bill, check that out, and see what the bill was for. That, again, from when we put the vendor in place. We didn't actually enter a bill. We entered a vendor with a beginning balance and generated this information. We'll X out of that. Then we have the deposit. If we select the deposit, we see the $25,000. That then is the beginning balance. We didn't actually put a deposit in. We put the beginning balance in the checking account, and that was generated a deposit form through QuickBooks, closing that back out. Credit card expense, and then we have the journal entries typically used when QuickBooks doesn't have any other way to report something. So if there's no other form QuickBooks can use, it uses a journal entry. So here we set up a loan payable. There is no journal entry because that's not a typical transaction. So it's not something that happens on a day-to-day basis. So we just have to use the general journal or journal entry, and it puts the other side to the opening balance equity. So here we can actually see the two accounts. And for people that are using financial accounting or have learned financial accounting, this might be one of the most clear things we've seen so far, more clear than an invoice or a deposit form, because it actually shows both sides of the accounts. What it doesn't show, or what could be confusing, is that it has debits and credits. That's the reason QuickBooks tries to avoid that for normal day-to-day data input usage, so that people don't need to know debits and credits. So we're going to close this back out. So once again, here are the balances. If we want to go through there and tick and tie these balances out, we're going to now go ahead and export this report to Excel. So we're going to scroll up top. We're going to select this item here, export, and we're going to select export to Excel. And that will open up Excel and complete the exporting process. Here we have our exported document. It looks pretty nice. We might want to format this one a little bit more because it looks like it might be big enough to not fit on one page. We also have some items down here that we can't quite see. In order to do that, we can go up to top. First, I'm going to make this cell a bit wider so we can see all the items here. We can do that by putting our cursor right between the J and the K, so it looks like that, not like that, but like that, not like that, but like that. And we'll just drag this a little bit lighter. Left click and drag to the right, and there we have that. Then I'm going to check to see if it prints on one page. One way to do that is to change from the view here down on the bottom, this is normal view, to page layout. So this second icon is called page layout view. And so I'm going to select the page layout view. And you'll note that it goes on two pages. If we select this third item, then we'll see the page break view. And we'll see that there's a drastic break right there. So if we go back to the first one, then I'm going to go back to the normal view. And then it puts this little dotted line. Basically, that's the page break. Now, this report won't look very good if we print it out like that, because it'd be okay if it was on 2 pages long, but it's not too good if you have this page and then you got this page next to it and you got to put them next to each other. So we probably want to do something. A couple things we can do. One, we could try to change this font from a portrait orientation to a landscape orientation. In order to do that, we can go to the Page Layout tab up top, Page Layout tab, and then we're going to go to the Page Setup group, and we're going to the Orientation. And we're in Portrait, we're going to change that to Landscape. So if we do that, it makes it a little bit better, so we're a little bit better here. Not quite there yet. Other things we could do, this first column, we may be able to just delete this first column. So I could put my cursor right on the A here. Just click on the A, right click, and actually, because this is a combined cell or a merged cell, that linking could be a problem. Let's try it one more time though. We'll put our cursor on A, right click down here somewhere, not up at the top, right click down here, and delete. See if it lets us do that. It does, but we deleted the whole title. So maybe that's not a good option. I'm going to undo that, go back up top and undo. Now the reason that's happening is because QuickBooks exported and linked the title all the way across, meaning it made this one cell all of these cells. We could adjust that title. So this whole cell then is really named A1 when really it's going across this whole thing. We could have fixed that. We could, copy and paste the title and put it across B to J, and that might be something we would want to do. But there's other ways we can format this. We can also adjust just the size of the columns if we wanted to, and or we can kind of force this to work by going to the File tab up top, which is what we'll do now. And then we're going to go to the printing options. And within the printing options, we have a couple items here. We got to print the active sheet. That's what we want to do. Collection landscape orientation. This is the same orientation option we adjusted before. Letter size, margins. We could mess with the margins, but I'd rather not. And then we'll go to the scaling here. Scaling is what we're going to be adjusting. Let me move this up a bit so we can see it. We're going to go to scaling, and we want to fit to, so I adjusted this up a bit so we can see it. So we're going to go to the scaling options. Here, we've got no scaling, that's what the default is. Fit to one page. Now typically this would be okay if I do that, then it all fits on one page. That's pretty much what we want. But note that if it was a really long document, I don't really mind if it's a couple pages long. I just want it to be on one page wide. So note that if it was a longer document, you'd want to fit all columns to one page. And that would make sure, notice does the same thing here in that all the columns are on the same page and it was only one page long in the first place. But if it was multiple pages long, then we would rather have fit all columns to one page wide and let it go a couple pages long if it has to. Otherwise, it'll be way too small. So note that that does make it a lot smaller, the text, but that might be the best option. We're going to go back here. Other option, of course, is to delete some rows. For example, the posting row, we may not need it. The number row, we may not need it. If we delete those, we can make it a little bit nicer. We're going to go ahead and save this. We're going to go to the File tab. We're going to go to the Save As. We'll browse to the location we want to put this. I'm going to put it into the Excel Docs 6. I'm going to go ahead and keep the name again. You may want to adjust the name here, but I'll keep the name. We might just want the end part here. We may not need our name of the company. We might want to put a date, often useful, but I'm going to leave it as is and say save that. And there is the transaction list by date. Hello, in this presentation, we will generate the transaction detail report within QuickBooks Pro 2018. If you have been following along with us, that is great. We're going to continue on the Get Great Guitars problem. If not, then that's fine too. You can see how to print the transaction detail list report. This is going to be a report that really gives the most detail in terms of what's going on over a certain time period. So if there's a problem, if there's something going wrong, if you look at your balance sheet, income statement, or trial balance and say something is not working here within this certain time frame, one place to go, a really good place to go, would be then to this detailed report, which will show all the activity that has happened over the date range that has been given a list of the date of the transactions as well as the driving document, typically invoice, bills, checks, and then it'll give you, the name, the memo, a lot of detail. You can then drill down on those, zooming into those items to see if you see something that's standing out that doesn't look right at that point. In terms of grading an assignment, if you were to actually try to grade what you're doing or review what you're doing, this is a great report to look at for that to happen. So if we have an employee that's doing work and we want to kind of review the process of that work and see if the actual data has been input as we believe it should be, then the transaction list by date, great thing to use in order to fulfill that function. In order to do that, if you've been following along with this problem, you want to restore the backup to make sure we are in the current spot that we are in. We're all in the same spot. You can do so if you have access to the backup. If not, that's okay. We'll just print the same report and show how it is done. If you do have the backup, then you want to go to File. You want to go to Open or Restore and restore the backup as we have seen in prior presentations. We're then going to open up here to the Home tab. Note that, of course, you do need some data in the QuickBooks file in order to run this report because we're going to be running a report that's going to show the data over a certain time frame. So if you're looking at a new file with nothing in it, then you're not going to have any data in order to run the report. We're currently in the Home tab, just so you know where we are at here. That's in the Company and Home tab. Also note that we have the Open Windows open. I always recommend having that done. And to do that, if it's not open when you open the program, go to View, and then go to Open Window, and that will show us the windows that are open, that window only being the Home tab at this time. So we're going to run this report. Remember that this is going to include data that we're going to have. It's going to give us a list of all the data. We're going to do this. We can do this a couple different ways, but we're going to do that with the Reports drop-down. We're going to scroll all the way down to Accounting and Taxes. And then we're going to go down to the transaction list by date. Transaction list by date. Don't get that mixed up with transaction detail by account. That's different. We want to be down here with the transaction list by date. And we will generate this report. Doesn't look like there's anything on it. And that's because, of course, there's a date problem. We're going to change the dates in this report. So we're going to change the dates first to 12/31/20 and to 12/31/20. That's going to give us the data. Remember, we entered everything in as of when we had the beginning balances. As of the end of the period before, the one we will be continuing to enter new data in as we go. So this is the period before. We're going to start basically entering data after this point. So what we've done so far is we have uploaded in this problem, we've uploaded, well, we haven't uploaded, we've created a new file for Get Great Guitars. We have entered the beginning balances, we've entered the vendors, and we entered a balance for the vendor that was due. We entered the customers and the balance that was due. We entered our inventory and the items within the inventory records. Note what we haven't done. We haven't included any new information in the current time frame, meaning we haven't put any invoices in, we haven't put any bills in. This transaction detail information is really being generated just from us entering that beginning balance data as we've done so far, just from entering that those assets, those liabilities that we needed in order to start the business within our QuickBook file as of the last date before the current period that we want to start working in, which in our case will be January 1st, 2021. So this is the last day. We entered everything as of the last day. If we look at this data, just to get a sense of what we've got here, note that we've got the inventory by type, and of course this is going to be the form we'll look in order to review our progress as we go throughout this whole process here. So we'll get used to this report and reviewing it and making sure that it's looking like what we want it to look like. And so we've got the type, we've got the date, we've got the number, we've got name. In this case, with the names, well, we'll get into that in a second. We got the memo, account, cleared and split, and amount. Note that we can maneuver these and make them bigger or smaller based on just going right in between where those three dots are and making the cell wider or smaller as needed. And if we go through that, then we can think about, well, how did this stuff happen? How did these things come about based on what we have done so far, especially considering we haven't really entered any data input that we would typically consider data input, such as bills and invoices. And the first item is the inventory adjustment item, and it was on 12/31, of course, as they all are. We have the memo here, that being the inventory item, and it went to the account opening balance equity. And we see it's a split here, meaning there's multiple accounts, and the amount. If we zoom in on that, then we can see the activity. So this is what's great about this report. If we see something funny, we can go back to the source document. Now, the source document may not always look like what we input. For example, this one, we used a multiple input screen in order to upload this information. When we go back to it, it's only showing the basically one input screen, one item at a time. But this is going to be the most kind of normal document that would make this inventory item. and we can see that we have the item name, the description, the quantity, and then the value within this screen. So this is going to give us the detail. When we double click on this information, I'm going to close that back out. Those were the inventory items we set up, and again, we set them up in such a way that we didn't have to put a journal entry in. We just put the beginning balances in a prior video. You could take a look at that. And these are going to be the same balances for those transactions. QuickBooks generating this transaction detail from those beginning balances we had put in that case from the inventory. Then we have this invoice. And again, we're thinking, well, we never even put in an invoice. And it generated an invoice. Why did that happen? Because we set up these 3 customers, and those 3 customers had balances that were due to them as of the point in time we set this file up, and QuickBooks uses the form of an invoice to record that information. So even though we didn't generate an invoice, we hadn't yet seen an invoice, when we put those balances in the beginning balance, QuickBooks generated an invoice. If we double click on these amounts and see what happened by zooming in, drilling down as I would typically call it, we see the invoice here. Again, we didn't really make this invoice, but it has been generated as we put in that balance. Note there's no item, there's no quantity. They just posted it to opening balance, or the description here is to opening balance. So this is the form that has been generated as we put in that beginning information. That's okay for us right now because it's going to make the balance sheet account correct, and the income statement account is as of the prior year, which we're not going to be using, which will then roll into the balance sheet accounts. So I'm going to close this out, and we have an invoice, and then a bill. And again, we didn't enter a bill. Where did that come from? Well, we have this vendor, Epiphone, where we buy our guitars from, and we owed them $15,000. We put in the beginning balance of what was owed to them, and QuickBooks generated a bill because that's the driving form that is used when QuickBooks says you owe someone money, that account being related to it of accounts payable. So if we double click on that, zooming in on that, then we can see the bill being generated. Again, the account in the expense account, uncategorized expense. Not a good expense. Typically, we would probably want it someplace else, but we're not worried about it because we put it in there as of the prior year, and we're not running reports in terms of the income statement as of 2020. We just put the information in as of that date so that it would roll forward correctly, closing out to the balance sheet as of the first date of the time period in which we want to enter new data like bills and invoices, that being January 1st in our example, 2021. We're going to close this back out. We then have a deposit here. We didn't enter a deposit. Where did that come from? Well, we entered something in the checking account, and when we did that, the software uses the form of a deposit to drive that transaction. So all we did was open the checking account and put a beginning balance of $25,000 in the beginning balance, and QuickBooks then generated this. So we're going to zoom in on this. And again, this is kind of the cost of not putting in journal entries and whatnot that this is happening, but it all works out as long as we put the dates in there as of the last date of the prior period, and it'll all work out for the first date of the current year that we will then be working on. But note that we deposit. Here's a deposit slip, and it went from account opening balance equity. Again, we don't want opening balance equity. That's a funny account. It's basically an admission by QuickBooks saying we don't know where to put this, so we put it into opening balance. We had corrected for that, however, with a journal entry. So that's the one journal entry we had to put in order to adjust this. But that's what was generated by QuickBooks when we entered that beginning balance. Then we've got the credit card here, and that's going to be the credit card charge. I'm going to make this a little bit larger. Again, we never put anything in called a credit card charge, but we did put a Visa account in there, and we did put an opening balance in there of $1,000. When we did that, QuickBooks takes the form, generates the form. That's what drives things within QuickBooks transactions. It drives financial transactions. And so if we double click on that 1,000 to zoom in on it, we'll see the credit card purchase charge here. And again, it went to the memo opening balance, account opening balance. That's not a real kind of account that we want to be typically using, but but we've already adjusted for that and in a prior presentation, so you can take a look at how we dealt with that. But note what is being generated as we set up this company, as we put these opening balances in. We then had a loan and a furniture, and that means we put the loan on the books. Again, we didn't make a journal entry. This is more typical, however, to just make a journal entry. That's kind of what we would expect when we set up beginning balances. But in this case, we set it up by opening the loan account and putting in a balance in opening balance. Now, because a loan is not a typical transaction, it's not something that like a bill or an invoice we do all the time, like revenue or expenses that we see commonly, the QuickBooks goes to the journal entry, which is kind of like the last resort if it's not a normal transaction. And so if we double click on this item, we see this information. It tries to really resist going to debits and credits by first going to this ledger. But the ledgers are almost just as confusing when we're not really talking about a ledger that's commonly known to us. So I'm going to double click on the journal entry right here. And this is really what it generated, is this journal entry. I'm going to close this. It credited loans payable and it debited opening balance equity. We may not know what debits and credits are, and that's the point. That's why QuickBooks is really trying to hide the fact that these are journal entries, or trying not to have us worry about it, trying to fill in a system that we don't have to deal with it. But just so you can see the behind the scenes, this is what was generated. Again, it put it into opening balance equity, which is something we had adjusted for in a prior presentation. But this is how QuickBooks is dealing with us putting in those beginning balances. I'm going to close that. Going to close that. We then have furniture and fixture, once again being done with a journal entry. Again, we didn't put a journal entry in. What we did is we went into furniture and fixture and we entered a beginning balance. What did QuickBooks do then? If we drill down on this, it tries to take us to another register here. But I'm going to take a look at the journal entry by double clicking right on the journal entry. And it generated this journal entry, debiting furniture and fixture, crediting opening balance. This is the side we pretty much saw when we entered the opening balance. This is the side that QuickBooks had to generate in order to make things work without us having to tell it where to put that credit balance. And that's the adjustment we made to opening balance, because that's not typically an account we want to use in a prior presentation. We'll close this back out. And last one, we have the opening balance. This was the one journal entry we made, and that was to close out the opening balance to 0 with a journal entry. So in essence, this is the information that we have. If your stuff ties out to this, if you can just tick and tie everything out to this, then your financials are most likely exactly like the financials that we have. If there's something that is not ticking and tied out to this, then something's maybe different and not correct. And if there is a problem with it, then what you want to do is really change the date ranges, meaning change the ranges all the way back to maybe 2000, so you can try to pick up any kind of date problems, and then bring it forward to at least the next year to see if we entered anything as of the next year that we're going to be putting stuff into. And if anything else appears and you see a different date other than 2020, then you could just double click on that, change the date within the detail within that information. I'm going to change this back to 21 and 20 and 20. So that's going to be this information. If it's out of order, however, note that could be just the ordering that you put it in there being a little bit different and the dates still being the same. So what you really have to do if you were to check this stuff off is just basically tick and tie. I see this here, I see this on mine. I see this here, I see this on mine. And tick and tie each one of them off individually and look for any differences. Once we have this, then we are going to export it to Excel and put it to the workbook we have been working on. If you're not working on that workbook and you want to export it for practice, then go ahead and export it for practice and use a new workbook. We could, of course, print it at this time, save it as a PDF. I like to get in the practice of saving it to an Excel file. I think that's a really useful tool to develop, and so we will do that. Going to go up to Excel here. We're going to select the drop down. We're going to create new worksheet. Create new worksheet. We will then have an option pop up and it's going to say create new worksheet. We then want to go to an existing workbook. That workbook, the one we've been working on, if you don't have one open, then we can create a new workbook. And it's already going to the place we want because we've been doing this for a while, but we're going to go to browse here and find our workbook. That's it. That's the Excel workbook. Double click on that. It should then be taking it to that workbook. Then we're going to say export. It will then open up QuickBooks. It will export this data to QuickBooks within a new tab in QuickBooks and name that tab probably Sheet 1. And then what we're going to do is rename that sheet tab and organize those sheet tabs in the organization and form that we want and do any other formatting that is necessary at that time. Here is our form. Notice it is a bit wide, meaning that it will print on 2 pages wide, which can be a bit confusing. It put the sheet here in the middle of the other sheets that we have made. We're going to go ahead and pull that to the right hand side by left clicking on it, dragging it to the end over here. Going to double click on that and we're going to call it transaction, and I'm just going to call it list. Well, let's call it that. And there we go, and that is going to be that. And note, of course, the header will be up top. If we were to go to the file and the print view, we would see that the header did pull over there. Going to go back, and that's going to be it. So we'll save this and say save that, and that will be that.